If you're watching the news at the minute, it might feel like the world is becoming more unstable than ever. But the truth is that investors have been living with geopolitical tension, inflation scares, and economic uncertainty, honestly, for as long as markets have existed. So I wanted to just kind of throw some thoughts out here. This is pretty much unscripted, just a few bullet points, just to prompt me. So there'll be a few more ums and ahs today, but I just wanted to kind of throw something out there just to give you some things to think about. Because most people who watch Meaningful Money are fairly experienced investors. They've seen ups and downs in markets before. So I don't think you need me necessarily to say, just need to hold your nerve. So I guess I just wanted to give you a little bit of context, really, that's all. Now, I think the first point is that there's always a crisis somewhere. It just always there is. I mean, if you think about the last 50 years, we've had, Cold War tensions. I remember the Berlin Wall coming down. I was like 16 at the time. We've had nuclear scares back in the 70s. Oil shocks back in the 70s. I mean, like proper, I was reading the other day that, some companies in the UK were on 3-day weeks because that's, all the electricity. That's all the power that was available. We had the Gulf Wars, of course, 9/11, the war on terror after that. Big one, of course, global financial crisis in 2007 and 8. COVID shutting down the world, Russia invading Ukraine. There's always something going on. And of course, right now, it's the latest conflict involving Iran. I guess the point is that at any given moment in history, there is always a reason to believe that markets are in trouble. The markets can't possibly rise from this point. There's always a reason to believe that. But actually, that's rarely the case. Okay? Come back to that right at the end. It's not just like geopolitical crises that are a constant as well. The same goes really for inflation and economic pressures. They're constant. They do come and go. I think particularly inflation sort of scares come and go in waves. 2 or 3 years ago, 2022, 4 years ago now, I mean, that was a huge deal. Obviously, Russia went into Ukraine. So much of the world's, particularly food, went through Odessa, big port in Ukraine. A lot of the global shipping traffic kind of goes past all there, similar to now, Straits of Hormuz being closed. There was a huge inflationary spike back in 2022, not least coming off the COVID kind of lockdown, and then suddenly everybody, the world coming out of lockdown and everybody wanting to buy everything, building materials tripling in price, all that sort of stuff. That was a proper inflationary shock. We haven't really seen anything like that since the 70s. But there's always something going on, and now with war in the Middle East again, a lot of the headlines are about oil prices. They've pretty much, in heating oil has doubled. But I mean, with oil now hitting $100 a barrel again, there will be a knock-on. There's no doubt about it. And for people struggling every day with the cost of living anyway, the last thing they need is further inflation. I don't think for a minute we're heading back to 2022 levels of inflation. But the point is really that there's always something, And oil prices particularly always spike during conflict, and particularly, of course, in the Middle East, where so much of the world's oil comes from. Governments tend to spend heavily during crises, right? That can fuel inflation a little bit. Supply chains, as I've said, they get disrupted as well. But none of that is new, right? If you think back, 1970s oil embargo. I was alive for the last half of the 1970s. But I remember an oil shock in 1990. Lots of talk about that with the Gulf War and the post-COVID, post-Ukraine inflation surge. There's always been inflationary and economic pressures. It's not an exception, right? Economic pressure is not an exception. It's the normal backdrop for markets. Really important thing, third thing to say, is that markets price bad news faster than we can process it, right? So by the time something is dominating the headlines, markets have already digested it. Investors often react emotionally. Of course they do. We are humans. But we react after the prices have already adjusted very often. And I think it's crucial to remember that long-term results are generated not because the world is calm, but because it isn't. Almost we need volatility in the world for markets to rise. I read something brilliant the other day. It said that markets climb a wall of worry, and they always have. But markets climb. They do go up. The advance in markets is eternal. It's permanent. The declines are always short-term and temporary. Right? Short-term might mean 2 or 3 years, right? But generally speaking, it might even be longer than that. But given a multi-decade investing career, markets will always rise. They always have, they always will. I see no reason why that should change. And all that being said, so if geopolitical crises are continual, there's always something going on. If economic and inflationary pressures are constant, there's always something. And if, humans generally react too late, where is the risk? The risk is in the reacting. The risk isn't in the current affairs. I know you already know this, but I want to kind of frame it differently, because it's in times such as this that sometimes our rational mind just takes a bit of a back seat. It's often in tricky investing times that the biggest mistakes happen. It's usually when there's scary headlines going on. So we sell out after shocks, right? It's a shock, and we sell out of our investments, and that kind of locks in the fear, because we also connect, the loss that we've now realized with the market event. And when it happens again, we're more likely to do the same. And of course, it's not just selling out, it's missing the rebound. That's what does the real damage. So I guess you could say the risk is not, that the world is uncertain, because that's just truth. The risk is behaving as though uncertainty is unusual. We need to remember it's not. The world is monumentally screwed up. There's always somebody messing something up for the rest of us. But at the same time, as a species, we are really good at harnessing our innate desire to buy and sell stuff off each other, to make profit, to build, and that's what drives markets. The geopolitical tension at the minute is obviously serious, and there are thousands of human lives being lost. Really, that's the most important thing. You know that. I don't want to get preachy, right? But as investors and wealth builders, as people looking to make our investments last for a long and healthy retirement, from a market's perspective, uncertainty is the permanent condition. Remember this, if nothing else. The world has never, ever felt stable in real time. The world has never felt stable in real time. And yet, markets have rewarded patient investors for more than a century. So, hang in there.